Okay, time to get started. Good morning. Um, Today's webinar, How to Finance a Startup with Scenaria Henderson from Truist Financial. I am your moderator today, Adam Schubert with SCORE of Chester and Delaware counties. We're very happy to bring you today's webinar and hope you'll find it very helpful. Before we get started, a little bit on SCORE. For those of you who aren't familiar, SCORE has been around for almost 60 years now. As a resource partner of the Small Business Administration, we are here to provide assistance to small and startup businesses. In Chester and Delaware County, we have about 100 volunteers ready to help you. Our webinar programs and our mentoring services are available at no cost to you. At the end of today's webinar, I'll give you more information on how to request mentoring if that's something you're interested in. For today's webinar, a couple rules of engagement. The presentation today is being recorded and will be made available to you later today in an email. All participants have been placed on mute. If you have any questions today, please put them in the Q&A box. Scenaria will take your questions at the end of her presentation this morning. If you have comments or references you'd like to share with the participants, you can place them in the chat box. With that, I'm happy to introduce today's speaker, Scenaria Henderson. She's a branch leader for Truist Financial Corporation and is responsible for managing all aspects of the branch, including driving branch performance through leading, coaching, and managing business development, small business expertise development, and strategy. She also ensures compliance with internal controls, operational procedures, and risk management policies. She'll be speaking today on how to finance a startup.
Okay, so thank you again, Adam, for the warm introduction. Truist, we partner with SCORE, and I'm really appreciative of the partnership because of what SCORE does for the community, specifically for the small business community. So Truist, we like to live in our purpose. We really focus on our purpose, mission, and values. Our purpose is to inspire and build better lives and communities. We do that by focusing on clients, on our teammates and stakeholders. And we like to really uphold to our values, which is trustworthy, caring, one team, success, and happiness. Our small businesses are the hearts of our community. So when we say inspire and build better communities, that starts with the heart of the community, which is the small business owners. Having that partnership and that expertise and understanding that, small businesses are the backbones of our communities is really important. And that's why we try to lend that personal touch and even offer, outside of seminars, we partner with organizations like SCORE, who does mentorship within the communities and to start to small business, for startups for small business. We focus on small business, not just from the startup standpoint, but from every stage of the life cycle of your business. So a couple of things, you're thinking about starting a business, or maybe you're already in business. But one big key crucial thing is how you're going to finance that business, whether it's to start up, whether it's to expand, but a few questions you want to ask yourself. How long have you been in business? So whether you're starting up, whether you're 2 years in, 5 years in, how long have you been in business? Annual sales, what are your annual sales? Gauging those annual sales. I mean, let's be honest, whether you are for profit or nonprofit, sales are important to gauge performance and how the business is doing. If you're for profit, obviously you want to make sure that you're looking at sales from a revenue standpoint to make sure that you're generating revenue. Where do you see your business in 5 years? Constantly asking yourself, whether it's expansion, whether, you're dissolving the business, selling it, no matter where you are in the life cycle, asking yourself and looking at a 5-year plan. And then finally, what do you need to know to do or learn to get there? So that's where you have organizations like SCORE, where you have banks like Truist, where we sit and we give you that one-on-one feedback and recommendations as to things you can do to help expand or start the business. So the fundamentals of business growth. So all businesses are unique, depending on what your vision and what your value and your purpose is for your business. For the most part, most businesses have the same things in line that we need to get started in terms of the business. So business bank accounts, regardless of, no matter what the business is, you need a bank account. Efficient methods to receive payments from your customers. So you need to know how you're going to get paid, how you're going to receive payments from your customers, how it's most convenient, not only for you, but for the customer to make the payment. Efficient methods to make payments to your suppliers. So, how are you going to pay your vendors, and what's the most easiest way and most convenient way for yourself and for the suppliers? Cash flow management tools is huge. That's important because before you have anything else, you need to be able to monitor your cash flow. So we'll dig into a little bit of that later in the presentation. Access to credit. And then finally, insurance coverage. Are your employees covered? What does your general liability look like? Is the building covered? So those are some things that, regardless of the business, those are some key things that every business owner needs to look at. So we talked about cash flow. So before we even speak about starting any type of startup and the financing behind that, cash flow is going to be a topic of conversation. So cash flow is simple as put, money in versus money out. The amount of money that you're bringing in. So, whatever you're getting paid from your customers, however you're getting paid versus the money that you're paying out for your employee, for payroll, vendors, office supplies, other equipment. That's what you're monitoring when you're looking at your cash flow. So, ask yourself, how do you manage your cash flow? So even if you haven't fully started the business, you want to gather some things in mind as to how you will monitor your cash flow. So everyone has their different style of managing cash flow. I've met with business clients that use traditional Excel statements. Some business owners use more sophisticated online software to manage their cash flow. I've met with some businesses that are old school and they do it by pen and paper. So regardless of how you're monitoring that, you want to make sure that you have a process in place to do that. That starts with your business deposit account. So, understanding that, you need a primary account or an operating account. That's going to be your main account to, that you do for your daily expenses and to run your money through. Payroll, if you have employees, you don't necessarily want to run your payroll with your operating account. So having an account for payroll if you have employees. Savings and reserve account, making sure that you have that set in place where you have a miscellaneous account or reserve account for, projects that may come up that are not a part of your daily operating. And then finally, any other account. So that could be separate accounts for ACH, for wire, for payment of specific vendors, merchant services, making sure you have a separate account for that if you're receiving merchant credit cards, and so forth. So money in, so collecting the money. So that's whether you take cash or checks, Zelle, Venmo, PayPal, wires and ACH, debit cards, credit cards. You want to make sure that you have a way to monitor those transactions that are coming in, as well as the fees that are associated with some of those transactions like wires. And money out, checks, debit cards, making sure that you're monitoring which checks are coming out, what checks that you've written, what's paid, what's not paid, credit card transactions, transfers, and as well as payroll. So this is again why a cash flow statement is so key. And before you even think about, how are you going to finance, you want to make sure you have a way to monitor how your money, where your money is going, what's coming in. So a cash flow statement. So I just spoke about different ways that, in my experience, that business owners have managed their cash flow. Truist has some very unique tools that we use to help our business owners manage their cash flow. In addition, I'm sure SCORE has, the SCORE mentorship program has different ways of helping business owners manage cash flow and help them with statements. So the biggest thing is a cash flow statement. The reason why that's important is because you can track your operational trends, identify any cash fluctuation. So you can take a look and see, your cash flow was up in October, and then you may have taken a dip in November. It provides insight into business liquidity. So how liquid the business is, how much cash you have on hand to do other projects. Project ability to pay expenses. So this is an example of a pretty basic cash flow statement. It's month by month, and again, it's pretty basic. Most business owners have whatever process they have in place, but regardless of whether it's this statement, whether it's, online, again, I encourage everyone to make sure that, you have a cash flow statement in place. Optimizing your cash flow. So ways that you can best utilize your cash flow or best monitor it is by reducing operational costs. So if you're paying something as simple as, looking at utilities and trying to reduce costs there. Streamlining your accounts payable and accounts receivable process. So if you have an easier way that, you may have someone dedicated to handling accounts payable and accounts receivable, if there's an easier way to streamline that. Outsourcing time-consuming tasks. So often, a lot of business owners will, in the beginning, especially as a startup, you may not have the manpower or the ability to have other people doing some of the task. So you're doing everything. So if there's a way you can find ways to outsource some of those things, whether it's, via call centers, via other outside vendors or consultants that can help with your media marketing, et cetera, and it's, at a reasonable cost, then that may be a more easier way for you to cut down on some of the tasks that you're doing as the business owner. Get rid of outdated or unused equipment. So share a quick story. I met with a medical professional who was starting another practice, and the practice in which he inherited, there was a lot of outdated equipment, and some of that equipment came at a cost for, to maintenance the equipment, and some of it was outdated, so it was, not the best equipment, breaking down, so that this owner was incurring additional costs. So looking at things as far, as simple as your equipment, and is it up to date? Is it something that will cost you more to maintain versus, you buying something that's maybe a more recent version of the same equipment? Taking a look at things like that to just, optimize your cash flow. And then evaluating your pricing for potential increases. So build and expand your business. So when we think about starting up a new business, obviously, the big thing is it may not necessarily be to expand, but to focus on building it. Why does a business need to borrow? So the cash flow kind of segued into borrowing. What I like to tell business owners is to think of it this way: no cash flow, no credit. So if the business is not showing that there is cash flow, if there is, no potential revenue, there's no annual sales, then that's going to be very difficult to obtain credit. So the reason why businesses need to borrow is to expand or lease a new location, purchase equipment, tools, or supplies, gain access to startup capital, weather seasonal lulls. So if you're a seasonal business, you may need to still have the ability to pay your employees, even when there's a seasonal low. Prepare for seasonal highs. So, if you're a seasonal business, you may need to ramp up and make sure that you have appropriate equipment, appropriate staffing for that seasonal high. Consolidating existing business debt. We find this a lot with newer businesses that, come on board and they have debt. So now there may be a situation where they want to consolidate the debt into one so that they don't have all of these different interest rates, paying a credit card here, a loan here, an investor that invests in the business there. And then having available funds for growth opportunities. So just making sure you have the money to say, hey, I want to take on this additional project. Those are, some very key reasons why businesses need to borrow. So some of the borrowing solutions I'll cover here, and then there will be a few that I will mention. So you may want to take note that are not listed on this slide. So small business loans. Obviously, a small business loan is you borrow one lump sum of money for what you need. Ideally, business loans are used for inventory, unexpected expenses, debt consolidation, and this would be more of an unsecured business loan because there's no collateral required. Small business auto loans. So you may have a business where you have vehicles, or you want to buy a vehicle, you have a vehicle, you want to refinance it, you want to upgrade it. This is where a small business auto loan is ideal. Small business commercial vehicle and equipment loans. So many business owners lease equipment. You may have equipment that you want to purchase. So purchasing new equipment, refinancing vehicles or other equipment. You may be in the business of tow trucks. So this is where a small business commercial vehicle and equipment loan will come into play. Small business real estate loan. Many new businesses identify properties that they want to make their permanent home and they want to own it. So this is where a business real estate loan will come into play. It's great for refinancing or purchasing of new real estate, whether it's for business purposes or even for investment purposes. So you may identify a building where you can run your office out of, as well as, that has a couple of offices upstairs that you can lease out. So now you're making money on both ends from an investment standpoint, as well as your business being situated in that building. And then finally, small business lines of credit. It gives you access to money whenever you need it. I am a big fan of the business line of credit because you use it if you need it. You don't pay on it unless you need it. So it essentially works like a credit card, but it's great to manage seasonal cash flow, expand inventory, and to grab hold of any type of new opportunity that you may need. Some other options that are not listed on this slide, personal loans. So for many startups, the challenge that startups come up against is, with banks not being in business for 2 years, not being in business for 18 months. So a lot of business owners will opt to look into the option of a personal loan, especially if they're 100% owner of the business. So you're 100% owner of the business, you want to get your business going, you may opt to do a personal loan. I've had business owners do personal lines as a temporary fix until they get, a certain time in business under their belt, and then we move into a business line. SBA is another great resource for startup businesses. There are SBA loans for startup businesses. And then finally, credit cards. So while credit cards are not listed on this slide, credit cards are essentially for our business clients on the bank side, the starting point of credit. So if you're a new business, once we discuss, opening the account, once we start discussing cash flow, the next conversation that we have as bankers is around the business credit. So as a startup business, it's the credit card is a good tool because not only does it allow you to build credit, but it gives you the flexibility to be able to pay for certain things. So what you need to know about business loans. Best type of financing for your business is credit cards, loans, or lines of credit. And again, that depends on the situation and what you want to accomplish. So, You know, a credit card obviously is not ideal if you're looking to purchase a building. But a credit card is ideal if you need to purchase equipment for your business, purchase items for the business, office supplies, things of that nature. Business credit cards are a great way for business to build credit. So for a starting business, building credit is crucial, because later down the line, you're going to need more credit and you want credit. So many business loans are unsecured, meaning they're supported by your credit worthiness without the use of collateral. Always make sure the loan terms align with your expected cash flow so you can meet the payment terms. So if you're looking into a business loan, you know, a 5-year loan may not be ideal for you. Maybe a 24-year loan, a 24-month, I'm sorry, not 24-year. A 24-month loan may be more ideal if you expect, you know, a large lump sum, or you're receiving a payment from a customer within a certain time frame. You want to take a look at what's ideal for you in terms of the loan, and that's a discussion that a banker would have with the business owner at the time they're discussing the business loan. Successfully repaying a business-related loan helps build your business credit. So I keep reiterating the credit because, again, business credit is just as important as personal credit, especially when, you know, you want to purchase equipment, especially when you want to pay on credit to certain vendors. It's important that the business is establishing some credit. And again, that a lot of times that starts with a business credit card. If you decide to borrow, expect that each month you'll need to pay interest and usually some portion of the outstanding loan balance. So I know that it sounds kind of elementary, but the reality is that a lot of business owners don't understand how to pay credit, especially credit lines. So lines of credit, when we think about a line of credit, lines of credit are used for short-term needs. So if you're buying something that's more of a long-term need, then a line of credit may not be ideal. A loan is more ideal for that. So when we think about lines, you know, we think, okay, I'm going to use $10,000 to pay just to fund my payroll until I receive this payment from a customer that's due to me in 2 months. That's where a line is great for. Because, okay, I'm going to pay the minimum payment this month, but in 90 days or within 2 months, it'll be paid off. That's where a line of credit is, that's where the line of credit is perfect. And lenders usually require owners to provide a personal guarantee as well. So while the credit is in the name of the business, there is always a guarantor. So even for credit cards require a guarantor. It can be any owner of the business. The same way with loans, lines, and even commercial loans. So in conclusion, for startup financing, you know, again, a key thing that you want to make sure is that, number one, you have a plan. And that's where SCORE really comes in to really help with that business plan. You have that business plan in place. You have a plan to make sure that you have a way to manage your cash flow. You have your projected annual sales in place, and making sure that you have all of those things, because all of the, whether you are applying with a bank for financing, whether you're asking for outside, you know, private angel investors, or whatever type of financing you're looking for, you're going to need to be able to provide, okay, how is this business going to make money? And how will this person be repaid? So it's important to have those things in place. Important to have the ABCs of making sure that you have those tools readily available so that you can provide a great business justification as to why you need the financing. And that concludes our presentation. I believe, Adam, you are going to open it up for questions.
Yes, thank you. If you have any questions, please type them into the Q&A box. So, yeah, and we'll give them to Scenaria to respond. At the moment, I don't see any questions. I'll give people a minute.
Okay.
As a reminder, a recording of today's webinar will be, here we go. What are the usual time periods for paying off business loans?
So for business loans, they can be as early as 24 months up to 5 years are the typical terms. And it really depends on the business loan. So we're talking about unsecured loans. Real estate loans are completely different. So a commercial real estate loan would be a bit different. I can't speak for other banks, but I could say for Truist or unsecured loans, there is no prepayment penalty. So that is another great advantage to a business loan. So if you, let's say you apply for a $30,000 unsecured loan, you think you may, you want maximum term, which is 60 months. But you feel like you can pay the loan off sooner. You don't have to worry about being penalized for that.
Great, thank you. Are there any other questions today? Okay, next question is, what is the minimum credit score?
So here I can only, so just to preface this by saying I've worked for Truist for 5 years. I have 15 years of banking. So I've worked for other large banks. So I can give a general answer to that, and then I'll give a Truist what we do, because each bank does things differently. So in this environment, ideally you want to have the personal guarantor wants to have a FICO score over 700. So we've recently, at Truist, moved out of the FICO measuring system to Advantage. So you want to have a score over 700. Your business core score is important too. So if your business has credit, then that's great. If your business doesn't have credit, that's fine. We understand that. But ideally, we would look for the guarantor to have a score over 700. Now, will we look at scores under that? Yes. If the client has an existing relationship, we don't just look at the credit score. So because our goal is to help small businesses and help our community, we look at the overall picture. So we're looking at your cash flow. We're looking at your annual sales. We're looking at, yes, we look at the credit, but we're also looking at your deposit relationship. So there's a few other factors that come into play. It's not just credit for us.
Hey, thank you. We have another question. How long does it take to get a loan approved from the date of application?
That's a great question. So we pride ourselves in how quickly we get loans done. So again, depending on the loan. So if it's a real estate loan, that's going to be a more lengthy process, because that involves an appraisal, that involves title and a few other things. Down payment may be looked at. So that's a little different. But if you're looking for an unsecured loan, unsecured line, I've gotten them approved and closed within the same day. We move really quickly when it comes to that. We understand that business owners, a very huge part of running a business is time and money. And so we want to make sure that, we get that to our business owner as quickly as possible. So we have done same day approvals and same day closings. It depends on obviously how, in underwriting terms, how clean the deal is. So, if the client has provided all of their documentation, if documentation is asked for, typically anywhere from 24 hours to 48 hours is what we're looking at for approval times.
Okay, I'll give you a question. You just mentioned documentation. So what type of documentation and other information is typically required as part of a loan application?
Great question. So ideally, you want to, if you are not new in business, you want to have 2 years tax returns. You want to have 2 years tax returns. In some cases, we ask for a financial statement, but for the most part, 2 years business and personal tax returns are what we look at. Some cases, depending on the credit score or the relationship with the bank, will take 1 year. But the most that you would be asked for would be 2 years of business and personal taxes, all pages. Now, flip side of that, with a credit card, we're not asking for any of that. So if you're new to business, my suggestion for all new businesses is to have a business credit card, because again, that's a great way to start business credit. So, if your first month in business or 3 months in business, or no matter, how long you've been in business, the business credit card is really, really great feature to have, and it helps the business establish credit. And that's a way of, we're not asking for 2 years tax returns. We're not asking for that documentation.
Hey, thank you. I have another question here. What are some of the criteria by which you judge one as loan worthy beyond financial ability to repay?
Could you repeat that again? I'm sorry.
Yes. What are some of the criteria by which you judge one as loan worthy beyond financial ability to repay?
It would be the credit. So in some cases, we do ask for, so if there's not enough or sufficient credit, we'll ask for other forms of credit. So that could be if you're paying a company. So we know that if you're paying a vendor on a monthly basis, we know that, some companies are not going to report. So if you can provide that proof of other forms of payment, it could be utilities. So we'll try to look at the full picture, and we'll try to be as creative as possible. If the credit, if the financials are not there, and we can do it through the credit, then we'll try to be as creative as possible. Now, just a side note, the higher the credit, the better the credit, then the chances of us, depending on the loan size, the chances of us asking for financials are not as great. And it's not to say that we won't or we can't, but I've had situations where I've had business clients that have 800 FICO scores and we don't ask for anything. And the reason for that is because we're looking at the credit history. And we, our feeling is that this person is not of a high risk to us, and the chances of us taking a loss is not as great because that person's paying it.
Thank you, Soneria. Do we have any more questions before we wrap up today? All right. Well, I'd like to thank everyone for their attendance today. And let me take the screen back here. Okay, so we would appreciate you filling out this poll I'm about to launch. Give us your feedback on today's session. Well, while you're doing that, excuse me, mention that SCORE provides mentoring services to small and startup businesses at no cost. If you're interested in obtaining a SCORE mentor, you can reach us at the link provided here or call us. You have the option of selecting from the list of mentors, or you can call us and ask for help in being paired with a mentor, and that mentor will reach out to you within a couple days, ideally. That's our goal, and schedule a time to have a first session and work with you as many times as is needed to help you advance your your business and work on whatever questions you might have. Our office is located in the Chester County Government Services Building on Westtown Road in Westchester. And again, you can contact at this email or reach us at the website indicated. That completes our program today. I'd like to thank Scenaria for a very helpful presentation covering lots of important issues for businesses looking to get financed, and look forward to you participating in future events. So thank you, and that concludes today's program.